Well, let's discuss this market and the setup with Taher Badshah, CIO of Invesco Mutual Fund. Taher, thank you for joining in. Season's greetings to you and your team. Wish you a very happy new year. So, the new year has brought about a bit of a reality check. I guess investors thought this one-way rally, this big December party will continue. But now we're getting used to, what a typical range-bound market looks like. Do you think this is going to be the way things play out over the foreseeable future? Are you expecting more consolidation? Or do you think it's a matter of time and the market will give way, one side, either up or down?
So, I'd like to think that we've seen some consolidation of the last 1 or 2 weeks, but by and large, I think the uptrend is still has been maintained. So probably over the last 3 months, if you look at it, the market has done reasonably well for itself, and the characteristic of the market has by and large remained the same. Nifty up about 10% and the mid caps and small caps doing significantly better, 15 to 20% on those names. So I think that is still the broad construct of the market, but I think now, we've seen a 15%, further by and large, a 15% kind of move in the market over the last 3 months. So obviously, at this stage now, we are relatively more. The risk reward I think is evenly balanced at this stage. Although I would like to still think that probably reward probably outweighs a little bit of risk into the first half of the year. We still probably are in a situation where the overall economic construct is reasonably positive, and there are certain risks which are lurking in the market, but there's not really much to say that probabilistically, they are a lot likely to happen than not. So, to that extent, I think we expect some of this momentum to continue in the first half. By and large, I feel that, much of the returns actually, like as I said the last time as well, will probably be seen in the first half of 2024 for this calendar year, and then probably, the Indian markets may take a breather, a moderate pause, or, some bit of downside as well from there on.
All right. Hi, Taher. So you're leaning towards reward rather than risk, particularly for the first half of the year. But what about mid and small caps? It's split down the middle because plenty of good stories playing out there, but there are also signs of frothiness. So I think it'll be imperative to be very stock specific, right?
Yeah, I think as we've traversed over the last 3 months, obviously things have got a little more heavier. Valuations have moved up as well. Particularly on the mid and small cap side. Once again, a significant outperformance compared to the large caps. But I think we still continue to kind of at the margin find ideas. We have to avoid some of the obvious pitfalls and probably something which is a little more overdone compared to the others. But I think it is still a lot about growth, and I think that's what is driving the market and probably will continue to drive the market. The overall theme will be to probably reward growth-oriented stories and those who continue to execute and deliver well disproportionately compared to the others.
Right. So you said you continue to look for ideas. Where are those attractive ideas as the market looks relatively, frothy, so to say? Will you still stick to the private banks that you liked earlier and the IT space that you believe has some tailwinds ahead of it?
So, BFSI is one space that I think is still worthwhile. Probably it at least can be argued as something which has got a certain amount of value, at least as far as the banking component of BFSI is concerned. But the space is attractive in general from the point of view that, it is now a larger canvas comprising of both lenders as well as a fair bit of growth-oriented non-lenders as well. And that makes it a relatively more attractive space. So I would like to think that that is something which is still reasonably doable, and that is something that we probably are also incrementally representing a little more of in our portfolios. IT, on the other hand, we'll have to take it as it comes. I don't really want to preempt a lot of things in this calendar year. There's, I would rather just take a neutralish stand and take things as they come instead of preempting anything, whether it be in the form of interest rates or direction of inflation or what's going to happen to commodity prices and so on and so forth. So I think it's that kind of a thing at this stage of the market. I think we'll wait we're now probably a week away from the commentaries of the important IT companies, and let's see how things swing, and then we take a view accordingly.
Okay. By the way, I just want to point out two stocks. RBZ Jewellers and Motisan Jewellers. These are recent listings. RBC is a really small name, it's less than 800 crores of market cap. And these stocks are locked in upper circuit, and therefore, I mean, the point that even Nigel was alluding to, perhaps just good to have a bit of a cautious view out there. Go there, do your homework, and then go about your investments. So RBZ, Motisans, the smaller jewelers are finding plenty of traction. Sorry, you were saying, Nigel?
No, just one more stock. Jyoti Structures. Yesterday we saw big volumes out there. Mr. Hiranandani, looking at the large trades. He sold close to around 45 lakh shares, but that's got absorbed. So that's another stock that's up close to around 5%. There was some selling pressure. Also, there are a lot of banks that hold stake over here, which, that's telling you that there could be further selling pressure in future as well. For the time being, it's getting absorbed. So that's another big volume buzzer in early trade.
Just a word on all these new jewellery companies that have come by the markets. The thing is that everyone now starts to look at the success of Kalyan Jewellers and the relative success of Senco that has happened in the markets, and starts to believe that, okay, now we have a big boy Titan out there. It's trading at certain valuations, but there's reason for it to trade at those valuations. Kalyan has done well. You've seen a decent move in Senco as well. So might as well just try to bid these up as well. Usually, the kind of moves that happen in IT spaces where people look at the large IT companies and then suddenly believe that mid-cap ITs will suddenly start doing better because of the valuation discount. Everyone starts to look at this. But,
absolutely. Classic bull market mentality, right? That you look at any new idea in a space that's worked well, and you just paint a very optimistic picture.
Let's get Tahir's view actually on this space. Tahir, what's your view? Everyone for many years was looking at Titan. It's been a big wealth creator. But now some of these smaller names, if you look at the last 1 year, my director will just pull up the chart of, say, Titan as well as Kalyan Jewellers. Some of these smaller jewelers, well, they are giving the bigger returns, the bigger deltas coming out of them. But what's your view? How would you approach this space?
So I think we've broadly been constructive on the space, and this is one retail business which obviously has the natural tailwind of gold prices helping overall growth. Same-store growth at least gets reasonably well driven by gold prices as well, and gold prices have trended very well in the last some time. So I think there is a constructive start to this sector as such. Obviously, Titan is a great example of a story which is of a company which has developed an all-India footprint and successfully as well. And I think some of the other players are challenging and probably trying to move in that same direction. So once again, like as I said, some of these will turn out to be success stories. Probably over a period of time, we'll have to see as to how they execute. Many of them are regional players who are trying to aspire to become more national players, and I think there will be failures and successes out of this. So we'll have to try and see how it goes. But this is broadly going to be the story which will emerge as far as some of the newer contenders in this space is concerned.
Just one point on Motisans Jewellers. It's come out of T to T. Till yesterday, the circle limit was 5%. So that's another technical factor at play. Could explain one of the reasons why that stock is up more than 15%. It's come out of T to T out of that 5% band.
All right. So that's about Motisans. But Taher, you did say that a lot of these companies have the tailwinds because of gold prices, etc. You like BFSI. What are your thoughts on gold financiers themselves? Largely because Manappuram, now that stock has taken a big knock. It's down around 7% some sort of uncertainty with regards to, the IPOs or value unlocking in one of its arms. What are your thoughts on gold finance, and do you think banks will continue to take market share away from erstwhile gold finance specialists? What are your, how do you play this?
So at this stage, we don't really have any exposure to pure gold financiers in any of our portfolios, and I think, as you rightly said, we've been cautious for some time, primarily on account of the competitive intensity in the space. Although gold prices being higher is a natural tailwind once again from many of these, and therefore some of those competitive challenges are not easily apparent during a period when gold prices are on an uptrend. But I think this is a space which will see that competitive dynamic play out a little more. So I think in that sense, therefore, it has been easier for us to play some of the direct beneficiaries of stronger gold prices and the fact that there is scalability in some of the jewelers or the jeweler retailers.
Okay. By the way, I also noticed, let's see if we can pull those stocks up. Honasa is seeing more buying, as is Nykaa the last time I checked. So these consumer stocks are really catching the eye. And, that brings me back to the question, discretionary consumption. We all know it's doing well. We are seeing what's happening with these, premium houses, etc., and, the big bikes and the big cars. But the question is, from a stock point of view, what can one play now? Because the stocks have been moving higher. And in specific, I mean, beauty, personal care, some of these newer listings in the consumer / technology / retail space. Do you like them?
Yeah, some of these, and we've have a fair bit of exposure to many of these in different ways, whether it be jeweler retailers or whether it be fashion retailers, etc. So I think we are there in that space. I would like to think that probably we've seen a fair bit of the tailwind of premiumization in both the retail sector as well as the non-retail sectors, and that while it continues, I don't really see any immediate reason for it to slow down, at least as a business. My sense is that probably if we see inflation moderating in this calendar year or the next fiscal year, we probably might see some of the bottom part of the retail or the consumption pyramid actually starting to even see some uptick and get supported as well, particularly given the fact that it has underperformed or that those businesses have been challenged for the last more than 2 years.
Trent, I remember you earlier liked it. After this big up move that we've seen all of last year, and that up move continues even now, the only concern is valuation. How much do you think is priced in, and would you still remain bullish on this?
Well, I mean, apparent valuations are obviously way too expensive, so you can't deny this. But at the same time, we've, like as I said, we have still, I would like to be reasonably constructive on names which are delivering well, executing well, and they've got their sweet spots which they're growing exceptionally well over the last some time, particularly in the case of Trent, as you mentioned. So I think, like as I said, that is what will dominate. I think the pockets where growth is visible, growth is coming about nicely, and there is a possibility of earnings upgrade. So I think if you measure it from the last quarter's earnings results to now, many of the stocks which have done exceptionally well, notwithstanding the valuations which were prevailing at that point in time, have done so because of the fact that earnings have got upgrades, in the last 1.5 months. And I think if that were to probably be the trend which continues, then that will support some of the valuations. I'm not necessarily trying to say that these are buys without any, they have adequate margin of safety from a valuation standpoint. But if you're probably, good enough to bear a correction of 10-15% in some of these names along the way on their journey over the next 3 to 5 years, I think you should be reasonably positive even now.
Okay, all right. Taher, it's been good talking to you this morning. Thank you so much for joining in. And once again, wish you, your team, great 2024. Let's see how the markets play out.